Hey guys, welcome back to another brand new video and thanks so much for tuning in. Today I'm going to be sharing with you my 3 golden rules when it comes to investing in the stock market so that you can get an idea of what I do and then decide if this is something that you want to apply to your own investing strategies. These are all things that I've found to be massively helpful when it comes to investing my own money. So I'm really excited to share these ideas with you so that you can start to benefit from them too. I really hope you find the video helpful, and if you do, go ahead and let me know by hitting the like button. It only takes a couple of seconds to do, but it shows me which of my videos you enjoy the most, and I can then keep creating content for you that's useful in the future. So rule number 1 is quite simply, don't get emotional. Basic human emotion is probably the biggest obstacle that people face when it comes to investing successfully. But whether you're a long-term investor or a day trader, a disciplined approach to trading is absolutely key to walking away with a profit. Knowing when to take a profit or cut a loss might seem easy to figure out when you're watching the market from the sidelines because you're completely impartial and you don't have any money at risk. But that can change very quickly when you've eventually got some skin in the game. As soon as you've got money invested in any trade, that's when the emotions of fear and greed start to have an effect on your decision-making process. And it's these emotions that can stop you from cutting losses early or taking your profits before they're gone. Knowing when to sell and get out of a trade can be a lot more difficult than knowing when to get in. But thankfully, stop orders exist and they can be a massive help for investors by automating the process of cutting losses and taking profits. For those who don't know, a stop order is an order that you place into the market to buy or sell a given stock when it reaches a predetermined price, which is known as the stop price. If the stock reaches the stop price, then the order you place becomes a market order and it's then filled at the next available market price. But if the stock fails to reach that stock price, then the order you placed won't be executed and that trade won't happen. By planning your investment out before you get into a trade and the emotions come into play, you can determine what price point you're going to buy at and what price point you're going to sell at. And that's going to make sure that you can cut your losses or take your profits early without letting your emotions persuade you to hold on to an investment for too long. So for example, let's say that you buy 1 share of Coca-Cola at $100. You could place a stop order at $98 to make sure that you don't lose any more than $2 if the price goes down. And you could also place another stop order at $105 to take your $5 profit if the price hits that point. This makes the process of trading much more systematic and it reduces the odds of your emotions getting the better of you and letting small losses turn into large ones or big profits disappear into small ones. Now, the second golden rule to investing is don't follow the crowd. Many retail investors read the news on their smartphones and then just believe what they're being told. But more often than not, by the time you're reading something on the news, the rest of the world knows about it too, and it's too late to make a profit from a trade based on that information. Unfortunately though, it's usually at this exact moment that the follow the crowd investors will rush out to buy or sell a stock at the top or bottom of the market, and then fairly quickly after that, the price swings the other way and they end up losing money. This story is all too common in investing and it underlines the importance of thinking independently from the crowd. It also ties back in with the first rule of not getting emotional with your investing, because if you're following the crowd, then the chances are high that you're being led by your emotions, just like everyone else in the crowd. The truth of the matter is that absolutely no one knows what the market is going to do in any given moment. So it's important to make your own decisions based on the facts and information that you believe to be true and not based on what everyone else is doing. Warren Buffett says to buy when there's blood in the streets, and that one sentence sums this whole point up perfectly. And the third and final golden rule to investing is that buying the dip is a real thing. So for anyone who hasn't heard this before, buy the dip is a commonly used phrase that people say after a stock has experienced a short-term drop in price. The reasoning behind this is that a lot of investors see the dip as a great opportunity to buy into a stock while the price is low, on the belief that the market is going to rebound and the price of the stock is going to trade back up to where it was before the dip happened. The most common scenario where this happens is when a stock is on a long-term upwards trend and the price then unexpectedly drops over a short period of time. When this happens, a lot of investors tend to rush in to buy the stock at what they see as a bargain price. And if enough people do it, it can turn into a bit of a self-fulfilling prophecy where all of a sudden the market becomes flooded with demand from people who want to buy the stock. And that then pushes the price of the stock back up and allows the upward trend to continue. Now, obviously, buying the dip isn't going to guarantee profits because the price of a stock can drop for many reasons. And just because it's cheaper than it was before, it doesn't necessarily mean that the new price represents good value. But in my personal experience, buying the dip has turned out to be profitable on more occasions than not. And it's definitely one of the strategies that I use when I think about investing in companies I believe are going to grow and become more valuable over the long term. So there you have it. I really hope you learned something new here, and do feel free to leave me a comment down below and let me know what you thought of today's video. Also, don't forget to give the video a thumbs up. It only takes a couple of seconds to do, but it really helps me out and it helps the channel to grow and reach more people too. I post a brand new video right here on the channel every single week. So if you want to be among the first to be notified when a new video drops, make sure you hit the subscribe button and also turn those notifications on by clicking the bell icon down below, and you're then going to be notified as and when new videos are released. So as always, thank you so much for watching. I hope you have an amazing day, and I will see you right back here next time.